If you're asking, should I pay this person 1099 or W-2, you're asking the wrong question, because this is not a choice. It's a legal classification. In Minnesota, getting this wrong can be the fastest way to turn a profitable business into a very expensive learning experience. Today, I'm going to break this topic down, including why industry matters and how Minnesota looks at classification, what happens when businesses mess this up, and finally, what changes the moment someone becomes a W-2 employee. So before we talk about tests and factors, we need to address something most people completely miss, and it's that industry changes how classification is applied. Minnesota has learned through painful experience that certain industries were absolutely abusing the 1099 label. Construction is the poster child. In Minnesota's construction industry, the law basically says, we're going to assume this person is an employee unless you can prove otherwise. Not maybe, not depends, presumed employee. To be treated as an independent contractor in construction, the worker must meet a strict statutory checklist. Things like operating a separate business, carrying their own insurance, owning major equipment, taking real profit and loss risk, and registering property with the state. If even one of these falls apart, congrats, you just hired an employee without realizing it. Other industries don't have such explicit statutes, but industry norms still matter. If an industry historically relies on employees to perform core work, classification leans employees. Think restaurants. If the industry commonly hires specialized outside business, classification leans contractor. On to the core question. Both the IRS and Minnesota agencies boil this down to one fundamental question. Is this person running their own business, or are they working inside yours? So to answer this question, the IRS uses what's called the common law test, which Minnesota largely mirrors. Instead of memorizing 20 factors, think in 3 buckets. First, behavioral control. Do you control how the work gets done? Do you set hours, procedures, training, or workflows? Do you require them to work in a certain way? If you're telling someone when and where and how to do the job, that's employee territory. Independent contractors, on the other hand, control results, not process. You don't train contractors on how we do things around here. You hire them because they already know. Second bucket is going to be financial control. Employees are paid hourly or salary. They don't invest meaningfully into the equipment. They don't risk losing money. They don't negotiate per project. While on the other hand, independent contractors invoice you, often bid jobs, buy their own tools, can lose money if they misprice work, can make more money by working smarter. Here's the tell most owners ignore. If the worker's income is guaranteed as long as they show up, that's not a business, that's a job. Third bucket is going to be type of relationship. Ask, is this an ongoing relationship? Do you provide benefits? Is their work central to your business? Would your business stop functioning without them? If they're performing core operations, not a side function, that strongly points to employee status. A marketing consultant supporting your business, that's likely contractor. But the person doing the main service you sell, much harder to justify as 1099. Contracts matter, but behavior matters more. Now, let's dive into Minnesota's emphasis. Minnesota courts and agencies emphasize a few specific factors repeatedly. Control on how the work is done, right to discharge without liability, method of payment, is it time versus project, who provides tools and equipment, who controls the workplace, and here's the key line business owners hate, not a single factor decides the case. Minnesota weighs the totality of circumstances, which means sloppy setups fail audits. Okay, Now that we know classification, we can dive into what happens when you get it wrong. If you misclassify a worker in Minnesota, you're exposed on multiple fronts. From the federal side, there's payroll taxes, Social Security, Medicare, federal unemployment, penalties and interest. And if you don't have a reasonable basis, the IRS doesn't care that the worker agreed to it, they'll still collect. Minnesota, state employment tax, retroactive unemployment insurance premiums, penalties and interest, potential enforcement actions, that's just taxes. Misclassified workers can later claim overtime, minimum wage violations, workers' compensation benefits, unemployment benefits. If someone gets hurt while contracting for you and the state says they were really an employee, you can end up paying medical costs and penalties for not carrying coverage. This is why misclassification is not a small risk issue. So we know messing this up can be a lot, but let's talk about what happens when a worker is properly classified as an employee. Once a worker is properly classified as an employee, a switch flips. You now have obligations. And in Minnesota specifically, there's a lot to keep track of. Earned sick and safe time, Minnesota paid family medical leave, employer obligations, running payroll, withholding income tax, Social Security, Medicare, federal unemployment, Minnesota unemployment insurance, filing payroll returns, issuing W-2s, I-9s, W-4s, you name it, there's a lot that goes into it. And so getting in contact with either a really trusted payroll provider or an expert in the payroll scene can be an awesome idea and can be a great way to avoid messing up some of the easy slip-ups that a lot of business owners face. Payroll is not as scary as misclassification. Yes, W-2s cost more, but they cost less than audits, penalties, and lawsuits. So here's the takeaway. You don't choose W-2 or 1099 to save money or paperwork. You classify workers based on reality. If someone functions like an employee, treat them like one. If someone runs their own business, structure it properly. And if you're unsure, document your reasoning, review IRS and Minnesota guidance, or request a formal determination, because filing classification after an audit is the most expensive way to learn this lesson. If you guys stayed to the end, thank you so much. Go ahead and hit that subscribe button. And Drosko Advisory is going to be dropping videos very often on psychology, tax, personal finance, all of the above. Love you guys. All the best.